Good morning, everybody. We are live. It is Tuesday morning. Hope everybody had a great holiday weekend. Lots of barbecuing, I'm sure. Still trying to recover. Anyway, we are going to have an abbreviated schedule this week, and I haven't even told Mitch what we're doing yet, so he's going to hear about it.
I look forward to hearing it.
Yeah, I'm sure he does. But we're going to do Market Thunder today, and we're going to skip a day, so we'll do Thursday, and then we're going to do Tuesday. Matter of fact, no, that isn't what we're doing. I don't even know what we're doing. That's always helpful, right? But yeah, we're going to do tomorrow will be the Process Warriors, and then we're going to skip a day because of the holiday, because it'd be way too much of the same thing, and then Friday we will do another Market Thunder. So we're going to just do the one. We'd have to do back-to-back Process Warriors, and that's too much process at one time. Anyway, lots going on. We finally have broken out of the pattern that we've been in. We're now at 1908.55. I'm not sure what the high has been today. A little while ago I was looking at it, but let's see here. We have been up to looks like I can't see. I'm sorry. 1911.61. So the extreme for the day today was 1912 even, and I didn't talk about this on commentary, but probably should have. But the average 3-day range has contracted down to 1147. So we're almost exactly in that range right there. 1912 even was the extreme, and we have 1911 and change. So I'm gonna put my glasses on here so I can actually see. But yeah, so this will help. Now I can see it wasn't the screen, it was my eyes. Anyway, 1911.61 was right there at the extreme of the day, and I suspect that it will stay somewhat in this range. We'll go through the numbers. There's a new plan, so we can get kind of moving on the plan as we go forward as the week unfolds. The Market Thunder Show, after doing it, I don't know how many times, 12, 15 times now, we've decided that we're going to have segments. So we're going to do the market segment first. We're going to do treasuries and currencies, and then we're going to do some sort of special feature, whether it's a technical corner or something that's out there that's special. And then we're going to do our stock of the day, and then we'll do kind of a wrap up. And so I think that's going to be a good pattern. So I realize that you folks just don't have time to sit around for an hour. Maybe it's in the background or something, like you have the typical TV on, and that's okay. In case we say something important, you'll be able to hear it. But if you just want to, if there's any segments of that you want to hear, we'll give you the ability for you to be able to tune in, or even if you're streaming it after the fact, you can do that. So we're going to go ahead and go over to the magic charts here, and one of the things that I usually start at here, and which we'll do this week as well, is we're going to put up. Matter of fact, that's interesting. I have one with. I'm just going to go to pure charts for a second, so Mitch and I aren't in the way of the indicators. We should be able to see the displays better now because we've adjusted the presentation, and it's interesting because the VPM 1.2 on a daily actually was a buyer this morning off the open. So we're seeing that a new short-term trend is emerging. I talked about several things in commentary last night, that the initial target range is the 1920 to 1930 zone, and we should continue through that, I suspect, in 3 to 5 sessions. Where the one characteristic of a quality breakout is that the markets actually follow through after the breakout happens. So today will be the actual 4th day up if we manage to close higher. We've not seen that for some time. When we were in the choppy range, we couldn't even get 2 days in the same direction for the last about 6 or 8 sessions. So it's nice to at least have some movement on the upside. And we're going to bring up, and Mitch is going to go through the breakdown of what happened last weekend, and we will be able to bring in some perspective, at least where some rotation. We did see some buys, actually about 1,400 net buys came into the system, and that is showing that positive rotation going on. And I'll talk about here in a second about some of the intermediate and longer term objectives that we have. But we're seeing the VIX now down to 1167, below 12. This is the lowest it's been for some while. It's killing the option traders that are playing the volatility, because the volatility continues to contract, which is never good for an option trader for the most part, especially if you're spreading. But the concept here that what we're getting to is we are getting to an extreme. So this does set some vulnerability in the marketplace as far as the possibilities of the market reversing from here. But it looks like there's more of a I guess the trends are evolving here are beginning of a trend rather than the end. So typically on this chart here we'll get 5 days up, and let me go over to another chart. This will be a little cleaner here actually. This will be a lot cleaner, I hope. Here we go. I'm going to change it back to the weekly graph so we can see what we're looking at here. But and I was on a daily, so that'll even help better. So here we can see a little better. The objectives that I was talking about, I'll blow this up so you can see it a little bit, is right here. These dots here are, it's actually 1930.93 and it's 1920.93 is the projection off of this pattern. So we should go initially up to that. You can see here's this is the fourth day up. Typically we will get a 5-bar pattern, and we will and then we'll see a couple days, 2 to 3 days down, and then a resumption to the upside of another 5 to 8 sessions higher. And this should be more than enough to at least get us up to the 1930 level that I'm talking about here. If we go and take a look real quick at the weekly graph, we're seeing this continuation of this same pattern that's been unfolding. And as I bring in some of the whiteboard here, this has been the pattern, and I know you can see it, but I just want to emphasize it a little bit, because this sawtooth pattern has been contracting for a while. We have slight expansions, but we're seeing this same little sawtooth right along this 40 period moving average, which is the 40 week / 200 day moving average, if you will. And we're continuing to see the momentum stay at a pretty high level. Looking at PPMs, 0.23 on the 10, 0.20, and 0.34 over here on the left. So we are PPM 2 was only at 17 the other day. We're now at 20. Now we're at 23 on the 10. So we are seeing acceleration, and with the 10 at the 0.23 level, we're seeing that accelerating slightly faster than the 20 at this time anyway. So there's this pattern continues to be in play. I am going to do my best to blow up this pattern just so we can see exactly some of these objectives that I'm talking about here. You can see there's 3 sets of dots, 1973.72, 2034, and 2072. This is the next range, and I can tell you we've seen these ranges all along during this pattern. And I'm going to try to find a place I can stick this for right now, but you'll see over when we were way over here back in 2013, in September of 2013, the target was 1833, 1869, and those levels were reached, or came very close to being reached right here with high of 1850. So we came within 15 points of that, and these patterns have been generated time after time, and they continue to be validated in the market moves above it. the interesting thing from this perspective, this goes back to September. This is September of 13 last year when this rally actually started. You'll notice that we've spiked underneath a couple times. We have spiked underneath the 21 period moving average. One time we closed under it. It felt like an but it just, there was too much momentum. So marking off these points where we were below the 21. Now we're above it. It's moving higher, as I said. Now it's at 20.25 because the market's moved up a little bit. It was 20 even. So the point is that we are seeing an acceleration. This 1973 level is got a 60% probability of being reached right now, but we're going to need to close over the short-term basis of the 1930 before that happens. So a couple triggers, but being the old classic Dr. Given, this is a given that we're going to move up to this level and start to see some more of the patterns unfold that I'm talking about here. And like I said, when we go through the VPM database, right now I have just a screen of Mitch and I. So Mitch and I are back, and what we're looking at here on these patterns is the continuation of this longer pattern, and where it ends, nobody knows. We try to, we're not even trying to guess because we're trend followers, and as I talked about over the last 5 weeks, and at least since the show and in commentary for the last 3 months, is the underlying trends continue to be positive and suggest there's a slight bias to the upside. Now, there's not a lot of, crazy overdone type markets happening here. We're talking about 0.5% today. We're talking about 1.2% on the day on Friday, and that was actually all the gains for the week, as it turned out. As we started off the week a little weaker, just continued Wednesday, Thursday, and Friday of last week. We saw the continuation of the first 3 days in a row in a direction. Now we're working on 4. We'll see. It doesn't look like from the intraday patterns that I'm looking at that we're going to see much. So let's go over and take a look at some of the shorter term charts that we're looking at. And I'm going to go back to our charts here. And so Mitch and I are gone again. But the bottom line is this is the hourly chart that continues to unfold. You can see earlier today we had a cycle come in at this little mini low, and now we're all the way into probably sometime right before the open or shortly after the open. There should be another hourly cycle, but you can see this trend that's been unfolding here is very orthodox. All the moving averages spread out and almost in perfect symmetric alignment, suggesting that this trend is well in play. On a very short-term basis, looking at the 5-minute graph, you see we had a cycle low come in right at that spike low here, and now we've traded off the highs a bit, so we're due in somewhere in the next hour of another little minor low. So this suggests to me at least that we're not going to see any big rollover in the markets. So from that standpoint, I don't really see a lot of what's going on. I think what I'm going to try to get a screen going here, and I'm going to have Mitch go in and talk a little bit about. Matter of fact, I think I can get him on screen so he can talk about some of the things that are going on here with the on the dashboard. And Mitch, before you take control, maybe you make this just a touch bigger, so that might be a little better for you.
Yeah, that works out well. All right, so as Bob has already mentioned, we did have quite a bit of buying this week in the database. You can see here, looking at the initial sectors chart, that while there was some selling, that the net buying took place pretty much broad-based across the stock market. One of the things that I do want to key in on, though, is actually on the funds page. So if we go and click right on funds, and looks like we're fighting for the mouse. There it goes, funds. And we're just loading up this page now. You'll see that there was quite a bit of buying across the broad-based index-based assets, your mutual funds and your ETFs. You'll see here that the allocation funds had a lot of buying across the board, which makes sense given that a lot of these allocation funds have large components in the large cap space. So it's not surprising that you'll see a little bit of similar movement within those funds, along with the equities that make them up. But if we actually drill down to the U.S. equity fund side of things, you'll see that where the buying took place most substantially was in that large cap space, where we've certainly furthered our holdings in those areas. We're still fairly long in the mid cap value, which we've had been up throughout this whole time as we've backed away. But as we've talked about, it's the large cap rotation that's really beginning to reemerge. That's going to drive this market higher.
Yeah, and I talked about that in commentary and been mentioning it. Matter of fact, 2 years ago, maybe it was at the national conference, I said I thought the large caps were going to emerge. Well, it took 2 years. I guess I was a little early in that trend, but it was obvious that at some stage the S&P needed to play catch up, and that's what we're seeing throughout the sector, and primarily on the large caps are really moving it.
Yep. And aside from that, we're still pretty heavily invested on both the commodity side as well as the international equity side as we continue to get further invested in those markets. Last year and really at the beginning of this year, there was a lot of pullback within those spaces, and the market has since firmed up, and we've seen a lot of buys throughout the beginning of second quarter as we've furthered our holdings of both the commodities as well as the international space. And that's pretty much a good snapshot of what you should be seeing if you have any sort of allocation-based portfolios. You should be seeing that within your portfolios at this time.
Yeah, and just looking at the planet real quick, this is kind of an interesting scenario. You can see all the Americas and Europe. Only one down is our friends in Russia.
Yeah, and if you click on that, you could see that for all their activity last year or the year to date, they're down 9%. I believe last year they were also down 15%. So although they've certainly been in the news quite a bit lately, it hasn't been doing well for their markets.
Yeah, one of the interesting things, I guess, in Russia, I was thinking about a couple things internationally. I think if you look at this quarter, it's up 13%, so it's quite a bit off its low. It was a good trade when while they're rolling tanks in the Crimea, was the best time to buy. I guess the blood in the streets was real there as far as that goes. I think that I think one of the things that is interesting as you're looking at it, I thought about some of the trades over the last few years that were missed, and I was having a woulda, coulda, shoulda moment, and I realized that when the craziness was on in Europe and they had Greek bonds were at 20 some odd percent, and all the bonds in Spain and Portugal and all of the stuff was there. That was amazing buys. I mean, those things were 6 and 8% on some of the peripheral stuff, not to mention the Greek stuff that was like 20. It was like buying a credit card line. It was like 20 some odd, 22, 23%. And none of those rates are there anymore. Matter of fact, it was probably the best trade on the planet was buying Greek bonds. And it's just you start to look at how investing looks when it really, and that's the kind of segues into what I always am amazed to hear is that people want to buy when the markets are up huge. Like right now, there's this anxiety that maybe we don't own enough or something. We're going to miss something out. We own plenty, and we're participating in this rally. We've increased some of the holdings. So don't be hesitant to follow the models and to put some money to work even at these levels. Having said that, they're still anywhere from 5 to 8% up. It looks like at this time, and if it fails, it does. But there's no way to know that. I wish there was, because I would certainly tell everybody. I would own an island by now, I think, if I knew some of those things, but I don't. And so I don't think there's that we didn't go over the funds just real quick, just a mention, but I guess you were. Did you look at it?
we talked about the funds. It's the sectors we sort of skimmed over because across the board it was pretty much broad based. If you want to scroll down a little bit, you could see. Bear with me one second. Let's see if I can drive here.
Should be able to. I moved the mouse again. Go ahead.
All right. So if you just skim through it, you could see where the buying took place, and you could see that really, I mean, we had these little green bars across the board. So you could see that it's pretty much across the sectors, across the groups. There's just been slight additional purchases, and really the big trend across these sectors and groups is really the capitalization, where we're seeing it across the large cap space. It's not necessarily one particular sector or group that's having the buying, but it is the market capitalization where we are seeing that shift in the rotation of the database.
Yeah, and really, and that's the key to when you're utilizing VPM, to understand it's incremental in nature. It's not all buying at once and selling at once. Right. It's not all that. It's about being able to incrementally move the assets around in a dynamic mode.
Yeah, and you will see, like at the bottom of the market in 2009, where there was a big shift across the board, but those are really outside the norm as opposed to the norm, where, as we went higher from there, we did take a pretty big stance in a lot of these portfolios, getting very aggressive. But as we got to the later stages of the market, that's where you started seeing the broad diversification, because we started shifting into all these different asset classes or sectors or groups or style boxes. And that's when you started seeing a lot more diversification is towards those later market cycles, like where we're at right now.
Yeah, and it's unfortunate people think how the system acted around the crises that Mitch is referencing. Everybody seems to go back there, but the norm is not that. The norm is seeing the stocks ebb and flow in and out of the system all the time, and controlling incrementally risk versus these big heavy tranches in or out. And
right.
That's not how the system really works. And having been having this thing for almost 14 years now, and being able to monitor it, you kind of get a feel for when they're ebbing and flowing. And for instance, the bullish percent on the database is at around 50% again. We got down to 47, maybe 46 for a second 1 week, and it rebounded. As you may recall, 42% bullish percent is a point where we start to go, uh-oh, this trend is failing. Well, we never got to that stage. And now the fact that we have there, wonder if I could get over to VPM 2.0 real quick here. I thought I was logged in. I will be in a second here. I have to agree to the terms, and off we go. So one of the things that we're seeing, and when we go to the all stats page, is what I wanted to reference here real quick. The all stats suggest that we have now, let me do a couple of things here. That's a lot bigger than I thought I wanted it to be. My little wheel is turning too fast. There we go. So as I scale up and try to get over Mitch's head here where the stats are, the average days long in the optimal is 196. The current duration is only 52. So that tells us this thing never gets to 196 on average, but we're a long ways off. Right now we're looking at the percent fulfilled of the number of trades we have on right now, and we're at 27%, 26.7. And that tells us there's quite a ways to go in this particular trend. And this thing is rotating, so it sells out some assets and it re-rotates into some other assets. So if you have portfolios, especially equity portfolios, that aren't seeing a rotation immediately, don't be concerned about that. Don't force your style box to do what you want it to do. Let it do go ahead and do what it needs to do from the rotation within the list that you have. And most of you most likely just rescreen, so you're exactly where you're supposed to be right now. And if this trend is going to evolve more, there'll be points in time where incrementally these stocks will start to rotate in, and theoretically you won't have any. Nice thing is by letting them rotate in, you're not going to have trades that are long in the tooth. You do need to watch out for potential, I guess, something that's buying it. Got out of a big trade and it's buying up 300, 400%, even though it's a new trade. We'll talk about that maybe on Process Warriors one day. And that goes to an article that I wrote that's in our archives called Buy Low, Sell High. That's worth reading if you haven't read that. And there's actually quite a few white papers that are worth reading if you haven't read. So let's segue back. I do want to touch, going back to TradeStation here. Going to go back to Pure Analytics. And what I want to look at here is, real quick, is getting to some of these. Let me get to the right screen. Getting to looking at the treasuries, which continue to be a place to pay attention here. And I need to, all right, that's handy. I went to the wrong chart. Here we go. So the treasuries are at 253 right now, and I do have a screen I put together while Mitch was talking, so I can be back online. Wish I'd have put him on right there. You missed a good one. Anyway, yeah. So the bottom line is, this thing is, as I talked about last week, we've been drifting lower. There hasn't been a lot of major momentum down, but it's bigger than I guess than what I've discussed over a few days. So we have a minus 0.83, minus 0.82, and 0.28 ppm 1, 2, and 3. And what this tells me is that we have a pretty good downtrend here. Yet these averages are going to represent some pretty good resistance. And let's take a look at where those are real quick, because I want to make note of that. And on the treasuries, you've got most recent, you've got the fast 262. I think I did discuss this on Friday. 262 with the highest at 272. So we could trade into, my bet is that we won't go much above, if there is a sell-off in treasuries and an increase in yields, you shouldn't go much above 262, 265 area, maybe 268. But that would be an extreme. And should that happen, then that might cause enough of this downward pressure to dissipate and set up a tone for some other aspects. So let's and this is the weekly graph that we're looking at here on these yields. My expectation off of the longer term graph, when we go over to the monthly, is that we're going to see yields ultimately move higher, but not as high as we originally thought they would go. For instance, in the outlook for 2014, originally had them targeted going into the 380 plus range. We're now looking at a much different range from the aspects here. If I can get to the right place, we're looking at the 336 to 350 range. We'll call it 335 to 350 on the upside, and that will be, it would appear to me, that will be later this year. And the question is still out there: will that be negative or positive for stocks? And my guess is it will probably be negative, but that's yet to be determined. So not to get too far ahead here, but that is one of the things we can continue to look. My one of the trades that I want to bring up here, that I'm talking about, just segue quickly over to currencies, and then we hopefully Mitch has a nice list of stocks of the day we can get through here. So my favorite currency trade is what? Japanese yen. Continue to see that as a positive. Here, this is monthly too long. Super slow motion. On the weekly, you're seeing that this thing is is still flat in this pattern and still trying to break out, but all the momentum is starting to turn up. So it's pretty close to a breakout. And I've talked about before, 110 to 120 range is going to be the expectation, which would be up where my cursor is here, and that should be should represent the point where we want to. That's where this one's going. If that's going to happen, it's not necessarily across the board. If we bring up the euro just real quick, the euro does not have that same look. In fact, on a weekly basis, this is the futures. VPM sold out of the euro this morning, and so it's kind of flattening down. In fact, you got -20, minus 0.4 on the PPM 1-2, so you've got a lack of short-term trend there on the euro. So we're not talking about the Dow index expanding. Just against the Japanese yen appears to be the place to be. Something we haven't talked about for a while, and I think maybe we'll touch on this. Nice, huh? I didn't mean to. Oh, great. Excuse me 1 second here.
Kathleen McLaughlin from Pillar Wealth Advisors. To accept this call, press 1. To send the caller into voicemail, press 3.
Nothing like having your phone interrupt you. I have my cell phone off. Didn't turn the Skype off as it turned. So anyway, that was interesting. Sorry about that, folks. Anyway, what I want to look at here real quick is gold. Just want to go through a couple things here. I'm going to take my screen off and turn my phone off here, just so that won't happen again. Anyway, as we look at what I was trying to look at here was gold. I'll bring that back up now, and we'll try that again. The gold is continuing to, where is it? To consolidate. It almost looks like the Japanese yen, if you will. There is a little more downside pressure on the gold from a trend. You got PPM 1.67, but you have a positive 0.29 on the 21 or on the PPM 2, and then you've got a minus on the longer term, which is not in trend mode. But this pattern continues to go sideways. The expectation I had in the outlook that we see 14.50, maybe 15.25 on gold, still looks like that's going to be the case. I have no idea what it's going to be that's going to drive that at this time. Don't have a scenario for it, but it's certainly, from a technical standpoint, it's still hanging in there. It's fairly close to breaking down, but not as close as enough to really warrant anything but that expectation of higher prices. It's interesting that we're seeing our friends over in silver do a little better, but it's the same pattern that we're seeing evolve over there. So Mitch, we are ready for the stock of the day.
Okay.
And hopefully, I'm not sure what I have set up here because we have a different computer that we're going off of here. Let's bring Mitch and I both up together here, and so we can see what's going on. So,
all right. Well, one of the things that I saw today newsworthy was the announcement by Pinnacle's Pride that they're going to buy Hillshire. Now, those of you that are watching this know a week or two ago, I think actually about 2 weeks ago, Hillshire actually announced that they were going to buy out Pinnacle Foods.
What's the symbol?
Pilgrim's Pride is PPC, and we are currently long that on the 1.2 system within VPM 2.0.
Yeah, let's see this here. I believe this is the right system. It is. It's been long for a little while.
Yep. So it's, we didn't see it necessarily a substantial price jump or anything like that with the announcement. Hillshire Foods is the ticker that they are announced that they are going to be buying out, which right now.
What's that symbol?
HSH.
Okay.
And right now we're currently flat on the 1.2 system on that one. And you can see that one did, of course, experience the pop in prices that often takes place when you see a buyout announcement take place, where immediately the price goes towards that buyout announcement if there is a solid basis to the buyout taking place.
Yeah, I didn't mean to bring Google up. I want to bring this up, and let's go ahead and just take a look at. So it said it's flat in 2.0 right now.
It's flat in 2.0 on the 1.2 system. It is currently long on the 3.2 system.
Yeah. And optimization is
optimized is 1.2 at this point.
And
yep.
That's HSH.
Correct.
Okay. Yep, flat there, as you said, and 3.2 is long.
So as if this buyout takes place, looks like the 3.2 is going to be the trade system that caught it on this one. But one of the things to keep in mind is Hillshire announced that they were going to be buying out Pinnacle Foods, which is ticker PF. And so if you pull that chart up, this is one of the things that I really want to hit in on with this case, in that we had talked about before that whenever there's a buyout announcement taking place, the risk really is that the buyout falls apart. And so you can see here on the optimized system, the 1.2 system, we had been in Pinnacle Foods for some time, about February, I believe, of this year. There was the initial announcement of the buyout taking place, but ever since then, the price had been falling back down further and further. Well, part of the deal with Pinnacle's Pride buying out Hillshire is that the Pinnacle Foods deal has to go away, and you can see that the price has substantially fallen as a result of that. So it's back down on the day. It's currently let me see where it's at right now.
Here, I can bring it up. What is it? The PF?
PF. Yep.
Let's put it up here. Yeah, it's interesting when you get deals like this. These are pretty complex, and this is one of the things, depending what component that you might have ended up within VPM that can cause all kinds of craziness. You can see this; it has the two bars up, and then the drop down 6.67% at 3105. So there's this gap up here where my cursor is, and it bounced down. Interesting enough, it's on a 0.69 right on the trend line. So it's probably, but it's also back like those 2 days that deal never even happened.
Right.
And this is exactly we talked about this. I guess we could go over to AZN as well, because we talked about that a couple of weeks ago and talked about that. That was the Pfizer and the company we can't. Since we're typical Americans and we have no ability to speak any other language. So we're looking at AZN. It's all the way back to a little better than where it was on the pop. But we had talked about this a couple of weeks ago, and I know we did have some advisors with this long in their system.
Yep.
And when this deal popped initially, we said, hey, let's go ahead and let's take that profit, because it's already trading at the deal price. If the deal falls through, this is where you end up. You're back there instead of what was the price here at the highs was, let's see here. High was 82.68, and so it was up quite a bit. If I went over the daily chart, you'd see this even more dramatic here. You'll see the pop up. This was the first day it popped up, and then it rallied a little bit more a few days afterwards, and now it's back down, and you're looking at some pretty negative tones there from that standpoint. So let's so these buyout deals, they're awesome, but you got to take advantage of them, and there's no reason to try to hang out.
This is just one of those great I told you so's. I hope any advisors that are watching this that had this ticker took our advice in the sense that if you see that it's at the buyout price, just go ahead and
Just
lock the gates.
lock it down. Go into
Yep.
VPM 2.0, turn it off, make it exit that day. Just get out of this thing and call it a win. And if it fails, it's still a win. They can't take it away from you, and that's always been the case. Back in the days when I was on the trading floor, we had options. We'd always on any pop like that, you sold half of your position because the goal was always, and maybe this is why VPM thinks like it does. I'm sure it is since I programmed it all. Is that the goal is always to eliminate risks, not to, I guess it's funny because a lot of folks are always trying to grab on and get the most out of everything, and that's not really a very good goal, because when you're trying to get the most, sometimes you find yourself at the wrong place at the wrong time when you're selling. When you're taking these profits like this, when there's a known quantity that this price deals at 89, the stock's trading at 87, take it. Don't worry about it. Just take it. And because the stock's not going to go any higher than that price, the ARBs may get it a little over, but it's going to be anyone that sees it over the prices on the big scheme of things are going to be selling it down to get it back down to that level. So, yeah, that's kind of on a takeoff, but you have to pay attention to what's going on with these stocks. So when you see them pop, and log in every day. Look at your stocks. It's not that hard. Make sure if you didn't get an email, you should be logging in every day. You should make sure that you're checking this stuff every day. And maybe I don't know, maybe you missed the email. If you're like me, I get about 200 and some emails every day, and I've got everybody that matters in categories. That's why we tell you folks, when you send us something, send it to support@VPM Partners. That way it gets into a bin that multiple eyes see it versus just sending an email directly to me. And maybe Mitch is better with his emails. I'm not sure. But
I always prefer support. So
yeah, support's a good place. That way there's a bunch of us going, hey, did you take care of so-and-so or whatever? And there's enough eyes on that things are going to happen. So that's always the best place to go. So what else you got there?
Well, just one last thing in regards to these issues. This is another great example where it's not just a set it and forget it and wait for VPM to exit out of the system. What you guys should be doing is you should be knowing the stocks that you have familiar enough so that at least you could stay up to date if there's a news item on it. I know some advisors, what they'll do is they'll take their current holdings, they'll load it up in Google Finance just to get those news items on it, and they'll be able to see any sort of changes within their portfolio on that if there is an announcement on it. But this goes down to process warriors. This goes down to just simply knowing your portfolio well enough to be able to just have, at a cursory glance, be able to see what's taking place on the names that you have your clients invested in. So that way you don't miss out on anything like that took place. And this is a great example. VPM won't show the buy or sell on this until whenever it is that the system finally calls a trend on it. It didn't call it necessarily on the pop of the buyout announcement or the subsequent failure of it.
Yeah, I just put a process over attitude and opinion little screen up for a second just to remind everybody really what it is that we're doing is the process isn't following all the signals. The process is, especially in individual stocks, having watching some of these stocks and making sure that if there are jumps in prices, that's why we suggest you go in every week when the market, when we run on Friday, and you go in and click on all the little C button in 2.0 and pop up the chart to see what it's actually done, to see if there's any spikes in prices or anything. Maybe there's not a sell signal, but maybe there was a big jump in the price. You should review these stocks. It takes literally, even if you have 15, 18 stocks, it's going to take you 15 minutes to review this stuff to make sure something hasn't happened with one of the stocks, and all of a sudden you find out, oh gee, 3 days ago something happened. We're professionals, I would say, and we need to make sure we monitor these things. I wish there was a way, maybe there is, I'm going to say it, Mitchell maybe come up with an idea. He's Mr. Wizardness, that if we knew that there was a price in a stock that jumped a lot, maybe there's a way that we could we could center those out from on our database. When we're getting data, we know what happens, and if it jumps more than a certain level of price, we'll actually reload the symbol. But I don't know that we have a way of knowing that that happened to alert you that your stocks have jumped. That would be a nice thing to do. So.
Looks like I got some homework for me.
Well, that's something that, especially stocks that we know are in portfolios, right? To look at
Right.
look at some percentage jump or something, we might be able to do something like that. We're all the time trying to automate and make life easier for you folks, so all of us as collective don't miss this stuff. Right now, we don't have a way of doing that, but maybe we will. We've got a lot of things that have changed in the last 6 months as far as what we were able to monitor, from changes in your portfolio to other things that happen. So
That's right.
we'll continue to grow along those lines. So
One of the other securities, and I do apologize, Bob, that we didn't get a chance to discuss this before broadcast. An advisor had asked about the 20-year Treasury on ticker TLT. Have you had a chance to pull that up yet? And
no, let's do it. Let's do it live. It's more fun that way.
All right, let's see what this looks like.
So TLT, this is daily. Let me get it over to a weekly mode.
Yeah, it's on 1.2 system for weekly.
Yeah, so it's been on. It's doing the. Let me get over and get our pictures out of the way so we can see some of the stats here. This is a pretty good trend. 0.42, 0.47, 0.20 ppm 1, 2, and 3, and you can see this is the beginning phases of this trend, and it's I guess I don't know if mind-boggling is the right word. It's probably a bad word to use, but it certainly is not what everyone expected. This, you can see, I've just drawn a couple arrows here. This is where we purchased this thing. You see the convergence of the three averages, and now the averages on when the rates were declining here, you see that the averages were in this broadening mode. I put some arrows here, and now that they're going up, we're starting to see the opposite happen. And right now, ppm 1, 0.42, 0.47, and ppm 2. So the 21 is catching up and narrowing a little bit, but not a lot. They're pretty much running along the same slope, and that tells me that this trend is still ongoing from the standpoint of that TLT is continuing to move up. It's a kind of that's always been a bastard maturity, 20 years. It's never been used for mortgages. It's kind of just one of those things that they did because they did. So it's not a real bellwether that's watched really closely. So within the yield curve, that's one of the things I need to put together for our treasury section, is to have some yield curve analysis that I think would be handy to have. But this is in a nice trend as it's moving higher here. So.
Well, similar to that, another ticker that was asked about was ticker TLH. That's the 10 to 20-year Treasury.
Yeah, same pattern, same station, same pattern. 0.26, 0.29, 0.15. So ppm 1 and 2 are in trend mode, and they're running just like it's not as strong as the 10, but it's very similar, and it is running higher at this point. So
one of the tickers that is commonly held across the board is Express Scripts, ticker ESRX. This one is optimized on the 3.2 system. Currently, we're flat this ticker.
I failed. What is that symbol?
ESRX.
And it's on the watch. Which one?
3.2.
Okay. So let's turn it on to 3.2. So we're out of this. Had a nice trade here. Here's the trade we got out of. A classic little slope up. We have 0.91 flat, 0.03, and 0.20. So you have in this configuration here, I was trying to draw a circle. Let me try that again. In this configuration here, I just drew a circle around this pattern. You're getting a stair step, so we're likely to go back up to that pattern, but as far as a trend goes, not going to happen for a little bit here at this point in time. So not a lot there. Let's take a look at the long term, just for fun here. Let's look at the monthly. Yeah, it's got a very jagged trend that's been unfolding here, and it did hit a peak value. Let me just bring this up so we can take a look at that. Did hit a peak value here of 79.37. It's currently 70.49, so down about 10-12% off its highs, and that's, you know, there's no trends involved, as I said. Even on a long-term basis, you've got some positive trends underlying, and we've traded down to the support that's around the 63 level, 63, 65 level, and we're 70.50. So there's support under the market, but from a intermediate trend standpoint, what we're looking at, there's no reason to be in there. And I guess if we went down to a daily mode, you can see this. We exited closer to 78 there and been out of this trade for a while, and now moving back into the ranges. So it's setting up a consolidation pattern. Like, as a matter of fact, it's the low here was at 70.30. So it really hasn't done a lot from that standpoint on on the daily basis. And we could even go even smaller. You can see you'll see the gap down that was missed out. This is an hourly, so this is the last month 30-day chart, and you can see it's been moving up, but not a lot to even talk about there. So Mitch, what do you got? Anything else?
Yeah, let's do. How about one last one? MRK, Merck and Company, which is also optimized on the 3.2 system. That one we should be long.
Okay. I believe it's on 3.2, so get the weekly here. There we go. We are long on that. 0.37, 0.61, 0.44, all trend mode. This is pretty typical here of these type of patterns. It's got 3.2 on it. If you recall, when we did the overview, what show was that? We should mark that so folks can go back and watch that, the 1, 2, 3, 2 show. We need to research that, send you out an email. But we did a fairly good detail of the differences between 1, 2, and 3, 2. The basic difference here is what we're seeing is that if I brought up 1, 2 here, you'd see an exit probably somewhere in this consolidation where my cursor is. But the pattern underlying here, you see the weekly 21 period moving average is pretty positive at 0.61, and that's right where the market's held and bounced off of just slightly. So if I take and I'll blow up a couple things here, blow up this pattern, you can see it really clearly now where it hit this moving averages and just held that line, and just yeah, it's almost a exact science here from that standpoint. So if we look at the low was 54.40, the moving average is 54.37, pretty close.
Pretty close.
Yeah, next weekly low was 54.85, the moving average 54.69. So it's right there. It's been hovering along that line, and with a 0.61 or greater, over 0.25, but especially at 0.61, your probabilities of the market declining below that level is pretty low. So what VPM is doing here is writing out this overall pattern that is showing us here, which is kind of a stair-stepping pattern, if you will. And now what we've gotten into, which is a consolidation, and these ranges up here that we're seeing, these target ranges are for $61 to $63 roughly in that range. So that's pretty much as it goes from there.
Hey, Bob, one of the things I wanted to ask you about, if you look back in the history of this ticker, if you could zoom out a little bit, you'll see that there was a little bit of noise that took place, I think, a couple years ago. And I just wanted you to talk a moment about that.
Well, let me see if I can find it. I guess both up here again. A couple years ago is kind of vague, but we'll see if we can. Yeah, I don't. That's interesting. I wonder why there isn't data. Merck certainly hasn't changed their symbol.
It should be beginning of 2013, actually. I did double check that in 2.0.
Okay. Yeah, so that's what we're looking at right here. This is 2013 right here.
Oh, there it is. Okay, I'm sorry, I didn't see it at first. So you see how we had the exit, and we had to purchase, and it was long, and then it purchased again in 13, right where your cursor is at right now.
Yep.
We get some questions every now and then by advisors that say, hey, why did I sell out of this and just buy it back, only to sell it again? And I just wondered if you could comment about that.
Trend failed.
All right.
No, just I'm being a wise guy. But no, the bottom line is, the fact is, let's do something here. Maybe let's zero in on that section there. I'm hoping I can pull this off what I'm going to attempt to pull off.
Yeah, me too.
So over on the far hand of the screen right now, where we see this exit long, looked like a pretty good downtrend, and the trend had failed. We were taking a profit at that time, and that might be another key element, is that there was a profit being taken. It was actually a positive trade when this one happened.
Right.
And then what happened is, next trade was lower, next bar, and then it started to reverse. And once it showed that it was going to hold that line, VPM recognized that the longer term trend became back in focus based off of the pattern, because VPM's looking at a lot of stuff. And then look at this, right as it started to come in, 3 weeks later, it exited again. And because it traded back down and everything started to turn negative. So if I brought up how much time do we have? We don't have much. So anyway, not to get into a big description of this, but there was a failure, moved back down. The PPM, let me just see what we got here. See if we can come here and find it. Minus 0.73 on the PPM to minus 0.26 and minus 13. So all of that was, there was a downtrend had reemerged there all of a sudden off of this one reversal bar. So we were higher above two of the moving averages that time. The next week it collapsed. The following Monday, I suspect, is when we got out of that. As it turns out, the stock went sideways again, and there was actually a repurchase over there, so that you got to this exit. You can't see it; it's off screen because I zoomed out. But anyway, so that's what happened. So let's go just real quick and take a look at what's going on in the world as a final back to review. It looks like we're at 1909.07. As I talked about, here is that 5 minute, I believe it's a 40 some odd bar. I don't know if it can tell us what it is. I'm not sure. Anyway, this cycle, 39 bar cycle, is about to come due here in 5 minutes, which should be a low, so we should start to see the market firm up. Everything's pointing to this close staying together throughout the session. There doesn't seem to be any breaks in any of the short-term stuff. This is the futures that we're looking at, but everything, the trends are all in good place, and maybe it could backfill a little bit, but if anything, there could be a surge toward the end of the day, the way it's setting up. So anyway, folks, this will we'll get Mitch and I will go back to our new location on the New York Stock Exchange by Tiffany and Company and Barclays. So anyway, we'll close out the show here. As I mentioned, we will do a Process Warriors, and then we'll announce the rest of the schedule for the balance of the week. Possibly doing 2 Process Warriors back to back is probably too much, so we'll probably skip a day, finish Thursday, and then we'll call it a week with a shortened holiday week here. So thanks for listening, folks. Looks like we're pretty much right on time here. Have a great day, and we'll talk to you soon.